The 3.8% investment income surtax that applies beginning January 1st of 2013 may affect many Americans who have saved for their future retirement. Here is how the 3.8% investment income surtax works. All Americans receive a base amount free. The single people receive a base amount of income of $200,000. Married couples filing joint receive a base amount of $250,000. You determine the amount of your base income for most Americans by looking at the bottom of page 1 of your Form 1040. If you're single and your income is under $200,000, you won't have the surtax. If you're married and your income is under $250,000, you will not have the surtax. But what happens if your income is higher than that? Here is how the surtax works. You first will calculate your total income, the bottom of the front of your Form 1040 for the applicable tax year, and you will compare that bottom line number to your base amount and determine the excess. For example, if you're a single person and the bottom of your 1040 shows $230,000, you'll compare $230,000 to the base amount of $200,000, and you have what's left might be subject to the surtax. So $230,000 minus $200,000 equals $30,000. You then will compare that to the amount of your unearned income. More to come on that in a minute. The lower of those two numbers is subject to the surtax. So a simple example. Let's say you have $10,000 in interest income, but your total family income is $230,000 as a single person. You start by saying your total income is $230,000 minus the base of $200,000 equals $30,000 excess. You compare that $30,000 excess to the amount of interest, dividends, etc., unearned income to determine the lesser of those two numbers. In our example, the lesser of those two numbers is the $10,000 of interest income. You would then owe a surtax of 3.8% times the lower of those two numbers, or $10,000, or you would owe $380. What income is subject to this new surtax? Well, I like to call the surtax the anti-investment tax. Why? If you have income from interest, dividends, capital gains, net rental income, annuities, or royalties, all of those incomes may be subject to the surtax. What is not subject to the surtax? Municipal bond income, retirement plan withdrawals, S-corporation distributions, and amounts that are exempt from tax already. For example, you may be been told you're going to have to pay tax on the sale of your home. That is incorrect because you still get the home sale exclusion. This short summary of the new 3.8% surtax is a quick reminder of the things that you need to talk to us at our office about. Thank you so much, and we'll talk to you again next time.